I'm looking at the laptop right here. I'm looking at you. Just give me a thumbs up if you can hear me. Okay, excellent. Is there any echo? Excellent. Are you hearing any echo or are we good to go? No echo. Excellent. Thanks, Thomas. Hi, Hisham. Hi, William. Hi, Irim. Welcome, guys. Okay, awesome. First of all, I want to apologize for yesterday. This was my first time, so I did not know how this is supposed to be running. So, a technical glitch, of course, but now we're good to go. I'm still hearing my voice from the laptop, but that's fine. Um, and just so you know, there is a delay between your messages and um, when I receive them. So if I don't answer you directly, there's a 2 to 3 seconds delay that is beyond my control. Okay, so welcome to the first session for the securities trading training. And the whole purpose of this training, as I mentioned, is to provide you with some information and valuable lessons in terms of how to get better at trading and how to control your decision making when you're actually trading a security. The first session that we're holding right today is going to be focused most on the psychology of trading. I received many requests on how can I become a better trader? How can I make sure that I make the right decisions? When do I enter? When do I exit? All of these things, and in terms of psychology, I will be discussing today. In future sessions, we'll discuss more about support and resistance levels, Japanese candlesticks, Fibonacci, and so forth. How does that sound? Great, awesome. Okay, if you see me looking that way, it's because I have a laptop. I see your comments. I have my phone and I have my notes in order not to forget anything. And of course, I have my water. Okay. All right, so let's get started. Just before we get started, please like and subscribe to the channel. YouTube really looks at the likes and the subscriptions, so I would really highly appreciate it if you can hit that like, so we would have more of YouTube's attention. Okay, excellent. Thank you. Awesome. Fantastic. First of all, let me ask you this. Is this a good timing for you guys? Do you want it earlier or do you want it later? What are your thoughts? I'm guessing works for me as I am in the West. Excellent, Thomas. Perfect. Doesn't matter much. Alter tends to be better. Okay, good time on Central Time. Okay, perfect. I had you guys on the. Okay, oops, later. Yeah, that's fine, Gerald. I got you. Oh, welcome, Gerald. Good to see you here as well. Okay, so where is everyone from? Just wondering. Are you guys all from the States? I'm guessing, Aram, you're from Turkey. Detroit, Michigan. Nice. Minnesota. Hello, hello, Wendy. Welcome. States, Tennessee. Tennessee. We have two people from Tennessee. Welcome, William, and welcome, Hunt Fish, Tennessee. Thomas, Canadian. Sorry, my bias. I'm from Montreal, Quebec, so I'm from Canada. We have a Canadian in the house. Nice. Okay, awesome. And how long have you been trading, folks? Welcome, Ashley. LA, Hisham. Since May, Wendy. 6 months, Thomas. Okay. Off and on for years, more seriously this year since last November. Jerry. Okay, cool. 15 years as a novice self-taught. That's pretty impressive. 3 months. Okay, excellent. So looks like we're all in basically in the same boat. We started recently, and except for Hunt Fish, Tennessee, 15 years. Welcome, Siraj from Calgary. Yes, but Georgia currently. Okay, awesome. Awesome, Aram. Okay, so let's get started. Trading, trader psychology. So when it comes to trading, guys, again, I'm gonna give quick overview of what is trading psychology and how we manage our trading and what have you. If you have any questions, I'll be looking at the screen and telling you, and basically reading through, and I'll respond to them ultimately. But when it comes to trading, it's all about the mindset. You have to remember that your mind is basically controlling every single action that you are doing. Okay, so it's sometimes I'm sure you've been in situations when you're like, should I hold on to this? It might go a little bit higher. I might be making more money. And then it does go higher, but then you hold on hoping that it will go even more higher. And then it starts to trickle down a little bit. And then you're still holding. And all of a sudden, you see yourself at the same position where you started. And unfortunately, sometimes it drops below your initial position. And you're like, damn, I should have sold. And that's because your mind is telling you to hold it for quite some time. And that's called greed. And we'll get to that point. And unfortunately, that leads you to one, lose profits that you could have made, as well as lose potentially money if you go back into the negative. So it's all about your mind and what it's actually telling you to do. And you have to be able to master your mind, especially in trading. You have to control your emotions. When you're trading, it's extremely important that you put your emotions on the side. Okay? Do not fall in love with any stock out there. Okay? Especially if I'm giving this guidance only if you're a day trader or a swing trader. And just to explain the terminology for whoever does not understand this part, a day trader is someone who is actually looking to enter and exit from a stock on the same day. So you might buy the stock at 10 a.m. and decide to sell it at 12 or 1 p.m. because you've made the profit that you wanted. That's a day trader. A swing trader is actually someone who enters into a position in hope that it will increase, the stock price would increase over the next couple of days if you're a bull. And if you're a bear, then you're hoping that the price will decrease over the next couple of days. Okay? Now, another situation when you're a swing trader might be actually that you enter in a position hoping that something would happen, but unfortunately you end up getting stuck in that position because what you anticipated that would happen does not happen accordingly. So you're stuck with that position for the next couple of days. Okay? Which might not be a bad thing as long as you understand the chart and appreciate what's going to happen over the next couple of days. And that's why it's very important that you understand what the chart is telling you today and over the next couple of days. We will talk about this in separate sessions, obviously, but I'll just give you a quick snapshot. For me personally, and based on my experience, and by the way, I've been doing this for over 20 years right now, I only analyze the hourly chart for daily trades. And in order to better understand my what's going to happen over the next couple of days, I look at the daily chart. Now, some folks might ask, do you look at the 5-minute chart, at the 15-minute chart, 30-minute chart, or what have you? The answer is no. And you might be wondering why I do not look at these charts. The first reason is if I'm going to start looking at the 5-minute, 15-minute, 30-minute chart, I'm simply going to freak out. And the reason being, there's so much fluctuations in the price that it makes you extremely nervous, that you might be holding the wrong position, you might want to sell or what have you. So I personally recommend go with the hourly chart if you're day trading, go with the daily chart if you're swing trading, or if you want to understand the trend over the next several days. Okay? How are we doing so far? Just give me a thumbs up if you're following or if I'm going too fast. Just waiting. All good. Okay. Awesome. Perfect. Perfect. Awesome. Okay, so let's get into the emotions. So there are two types of emotions that we're going to discuss here. First one is fear, and the second is greed. Okay? So fear comes in when you get bad news about the stock you're investing in. Okay? So once you get that bad news, you actually, a normal behavior for humans is to freak out, say that, okay, I'm going to dump this stock, I'm going to cut my losses, or even take my profits and just get out. And that's a normal reaction. We all tend to do it every now and then. Even pros tend to do it. However, sometimes we need to step back, digest the news, and then decide whether we want to actually leave a position or not. And this is why you sometimes notice on the market when bad news comes out, people just dump immediately. And unfortunately, that causes the price to drop. But how many times have you actually seen that price dropping strongly and then rebounding pretty quickly? And that's exactly the problem that a lot of people face. They say, I wish I held on to it because I would have actually made more money, because it rebounds to the price that you bought it at and then increases even further. So you need to control your emotions. You need to digest the bad news, and to better understand whether it actually will drop by a lot, or is it something that is going to be temporary and then increase back again. So I'm not saying that you always have to hold at bad news. Sometimes it is the right decision to actually dump it, but you always have to try to understand whether this bad news is long-term or short-term. Okay? Now, when it comes to fear, also fear could be fear of losing profits. That's also a valid reason. And that's actually something good. If you're fearing of losing profits, then you have to have a strategy, an entry strategy and an exit strategy. That's how you're supposed to think about it. And I'll be discussing this a bit more. Now let's move on to greed. I'm not sure if you guys heard of this. Have you heard of the saying, pigs get slaughtered in the market? Just let me know yes or no. Okay. Okay, excellent. Bill. Thomas, no. Okay, Wendy, Thomas, no. Okay, so let me explain to you this more. So, pigs get slaughtered is when you actually, investors, go into a stock and they hang on to their winnings, waiting for the price to keep on increasing. So you're basically waiting for the next uptick. You keep on holding. And unfortunately, things turn around and it decreases and it gets back to your price, and sometimes you end up in losses. That's why they call it pigs get slaughtered, because of greed. You're holding on to something, you're not sticking to your plan, and you end up losing money. Or you end up breaking even because you've decided to hold on in hope that it keeps on going up and up and up, and it never works that way. Okay? Sometimes it does, but is it really worth the risk of you holding for that long and not having a plan to exit? That's greed. Okay? So always have a plan, and I'll get to that point. Always be disciplined. Actually, it is a good segue into the next point. Discipline. Always stick with a plan that you have. And if you don't have a plan, then you should have a plan. Okay? I never trade going in without a plan. So I know what price point I want to enter at, and I know when I want to exit. Whether it's at the next resistance level, whether it's at the next moving average, or what have you. I know exactly when I want to enter and when I want to exit. Now, if it goes higher, I don't care. It's always going to happen that it's going to go higher. You're not going to be able to capitalize on every single stock to the max. Nobody buys at the lowest point, and nobody sells at the highest point. If you are, then congratulations, I salute you. But most of the time, it just doesn't happen. Okay? So that's why it's very important that you go in with a plan and stick to that plan accordingly. Okay? The next point that I want to highlight here is research and due diligence. Conduct your research and due diligence when it comes to stocks. Okay, especially if you're going long term. It's very important that you understand what is the stock, what is the float, who's actually investing into it, what else? What are the executives actually holding the stock, or have they sold their stock? has there been any insider buying recently? If you actually find out that there is a stock and there's insider buying that is happening, I strongly suggest that you start thinking of buying the stock. Because if the insiders are actually buying, and be careful, I'm saying they're buying it, not being granted. And when I say granted, the stock is through, for example, RRSP or what have you. So the company is actually awarding them these stocks. That's a completely different story. I'm talking about someone who actually, an executive, who actually goes in and decides that they want to buy the stock at a certain price. And if they do so, then it's a good indication that the price of the stock is going to increase, especially if they're buying in large quantities. So just keep that in mind. Also, look at their financials. Try to better understand, are they actually profitable or are they bleeding money? Now, this is a little bit challenging on the OTC market because of the fact that a lot of the OTC market stocks are not making money. A lot of them are, some of them are like BRTXQ, they just came out of bankruptcy. So you don't appreciate how much of a potential that they have. However, we do know, let's take BRTXQ as an example. We do know, for instance, that they have FDA approval for phase 2 for their BRTX 100. We also know that they have someone funding them or an entity funding them initially. We also know that there are 300 billion shares that may be issued in case they need them. So there's a lot of information that we should gather and better understand about a company before we invest in a company. And there is a difference between investing and trading. When you're investing, you're actually going long term. When you're trading, you're focusing more on day trading and swing trading. So short term. Okay? So make sure you do that. Now, the next point that I want to highlight is you always need to remember you do not owe anything to anyone. Okay? So there's a lot of people on, especially on social media, that might ridicule you for selling a position or what have you. My advice is just ignore all the noise. Do what is best for you. Okay? And sometimes it might be a good idea not to openly share this information because it might fire back at you. But the most important thing that you need to appreciate is that you are going into the market in order to make money. Okay? So you're not owing anyone any favor here, and no one owes you any favors whatsoever. So please focus on your positions, focus on your entry, focus on your exit, and that's pretty much what you should be aiming for. Now, it's very important also, at least for me, I try as much as possible to exit a position in an ethical manner. Let me give you an example. I hold in BRTXQ over 30 million shares. Okay. I know that if I decide to dump all these shares at once, the stock will crash. Okay. So that's an unethical behavior. Does it happen? Of course it happens. There are plenty of people who actually do it just to take their profits and exit. Do I personally do it? Not really, because I don't believe of burning everyone else just to make profits. That's just personally me. Is this your approach? That's something that you need to think about and see whether it actually suits you or not. So always keep that in mind and try as much as possible to be ethical on the market, especially on OTC. Listen, NASDAQ, New York Stock Exchange, you probably won't impact anyone by dumping your stock because there's a lot of liquidity. There's a lot of volume. But in OTC market, where typically the stock is trading between $250,000, and if you're very lucky, like BRTXQ or OPTI, there's between $2 million and $5 million, then you have more of a leeway. However, normally these stocks are low volume stocks and low liquidity. So just please bear that in mind and be careful in the way you exit. Try to scale things out slowly. That would be more appropriate and more ethical. And another point, even if you actually try to dump everything, especially if you're holding a large position, you might be scaring the other investors by putting a large position at a certain selling price. Okay, if you're doing a limit sell, if I was an investor and I see, for example, 30 million stocks going to sell at a certain price, I'll probably be afraid and sell my stocks earlier, because I have a feeling that this might hold me back. Now, sometimes these are what we call fake walls, but sometimes it's true. Someone is actually blocking it because they want to sell all their shares. Now, another way of selling is, as I mentioned, dumping, which is called a market sell, and that will certainly impact the stock accordingly. How are we doing so far? Good. Okay, awesome. Perfect, Jerry. Okay, awesome. Good stuff, guys. So the next point that I'm going to share here is, so holding through earnings. Personally, I do not hold through earnings. It's just too risky for me. Yes, there is a potential, or there is a possibility that the price could increase through after a good earning. But you know what? It seems like we're in a market right now that people actually, for some reason, even if good news or good earnings do come out, the stock seems to be dropping afterwards. Now, I'm not talking about Tesla or Apple or Microsoft or what have you. I'm talking about, the micro caps, the nano caps, or what have you. It seems like people do not hold the stocks through earnings. And personally, I prefer to miss on an opportunity that the price could increase after an earning than to hold a bag because the stock decided to crash because people decided to sell. So my personal advice, do not hold something through an earning, but that's up to you if you want to decide to hold it or not. I personally do not like that risk. I normally either sell my position ahead of earnings or not hold any position whatsoever in the first place if I know that there is a stock that is approaching its earning period. Now, here's a tip that I want to share as well. There are certain stocks that actually start to run on the day their earnings are going to start, or they're going to be announced. Apologies. Now, especially if there's an anticipation that the company will be announcing good results. Now, the way you need to think about this is that if the stock actually starts running ahead of earnings, if they do announce a good earnings, then they probably, the price of the good earnings has already been factored in because it increased already. And that's another reason why the stock might drop the following day. Okay? Unless it's a Tesla where they actually announce billions of dollars generated and hundreds of thousands of cars sold, beating expectations heavily, then you're most likely going to see a dip because of that run that happened on the day of the earning. So again, just food for thought. Think about it whenever you're investing into a stock that is getting close to earnings. I personally wouldn't do it once again, and I try to get rid of my stock ahead of the earnings, or not even go into it whatsoever. Okay. The next one is charting. We're going to be having extensive charting sessions over the next several weeks. I'll be going through different things like, like the support and resistance levels, the candlesticks, Japanese candlesticks, how to read those candlesticks, Fibonacci levels, moving averages, the 5-day moving average, 50-day moving average, 200-day moving average. Those vary depending on what works for you. For me personally, I only use 5, 50, and 200. We're going to be discussing things like stochastic RSI versus the normal RSI. We'll be discussing MACD, MACD. We'll be discussing TTM squeeze and so forth. So there's plenty of things that we will be discussing, and hopefully once you better understand the use of all of these indicators and you can better understand charting in general, you'll be able to actually make your own decisions. So you will not be waiting for me to record a video and tell you whether this is looking bearish or bullish and what's going to happen in the next hour or over the next few days. My whole purpose of creating these YouTube videos and live sessions is actually to empower you guys with the tools that will make you able to make your own decisions. So some of you might not have. Sorry, hi Raji, thank you for your help. How can I learn how to create a plan? Okay, that's a great question, Andres. So creating a plan is something that has to come from you. So I believe over the next few sessions, once you learn more about charting and what have you, you'll be able to understand or appreciate when do you want to enter into a position and when do you want to exit from a position. So remember the videos that I create for each stock that you guys ask me to look into, and I say, here is a point that you might want to be wary of and be cautious in case it goes under. That's probably a point that you want to sell at. Whenever I say also that the price might increase to a level and then not go further, that's also a selling point. So I think once you start getting more used to charting and once you start appreciating how to read charts, then you'll be able to create a plan that is suitable for you and that is not greedy as well. Hopefully that answers your question, Andres. Does it? Okay, excellent. So yes, so charting is something that I feel very strongly about. I use technical analysis extensively in my trading, and you folks, if you're following me newly, you'll know that people who have been following me for quite some time will tell you that I sometimes actually call it exactly at the same price that it will hit at the bottom or hit at the top. How did I get to know that? It's practice. Listen, you're gonna make mistakes, and don't be hard on yourself. It takes time to actually learn this, and sometimes you're gonna get it right, and sometimes you're gonna miss it. Listen, I missed it last time with BRTXQ. I said that the stock will not be going below MA200 because I thought that the head and shoulders was going to stop at this very strong level. However, you know what? It completed a complete head and shoulders, which is a bearish pattern. So these things are going to happen. Don't worry about it. Just learn and try to become better. That's all I can tell you. the more practice you do, the more conservative in your approach when it comes to trading, the better trader you're going to be. 3% wins, 5% wins, even in OTC, are beautiful. I do this until today. Whenever I see a chart that has turned bearish, I'll take 3%. I'll take 5%. I know OTC is well known for making 20%, 30%, 100%, but you know what? Sometimes you're not going to be able to get that level. You're going to have to exit quickly and take those small wins. And remember, small wins with time accumulate and make big wins. So you're better off taking those small wins and making a bigger win than to have one single very risky potential increase in price and it never happens and you miss on that opportunity. Okay, so just keep that in mind, and once again, don't get greedy, please. Okay, awesome. So the next point is, and I know this is extremely tempting, never chase. Please, I'm begging you, never chase any stock. When you see something that has increased 50% or 100%, or when you see a hype on Twitter, on social media, on stock tweets, just ignore that stock. Listen, if it goes up 500%, whatever, it's a missed opportunity. Do not chase a stock that has actually increased heavily, okay? You're better off missing that opportunity than holding a bag for a very, very, very long time, okay? Please, again, do not chase. It ends up more bad than good, okay? So, and listen, I appreciate the temptation. I appreciate that it might have gone 50% and it might go to 100%, it might go to 200%. But once again, you're better off missing that opportunity than ending up holding the stock for extremely long time. Okay? In fact, we're seeing a lot of pumps and dumps, and believe me, those pumps and dumps are being driven by people who orchestrate them together. And unfortunately, these people, the moment the stock increases really high in price and they hype it up on social media, and the moment you get in after it has increased 75% or 100% or 150%, they decide to dump on you. And that's why I'm telling you, be careful of who you follow, be careful of who you listen to, because unfortunately there are a lot of pumpers out there. And that's actually my next point, but I think we have a question here. Do you recommend a specific charting software or program? Yes, great questions, Wendy. So I have in my under the video, in the description, you will notice that I have a link to TradingView, which is exactly the software that I'm using. You can use that software. I think it's a fantastic software. I've provided the link. You can then go ahead and get that software. They do have 3 different plans: the Pro, Pro Plus, and Premier. I have Pro Plus because the moment you get your first subscription in Pro Plus, although it's almost double the price of Pro, they offer you a 1-year subscription with 6 months free. So basically, whatever you're paying for Pro Plus, you're actually paying the same thing for Pro. So you actually do save money extensively. And then they ask you to upgrade free to Premier. But I think that's just an overkill. You don't even need to do that because you're paying too much for something that you do not need. The link that I provided actually in the description also gives you a $30 off in case you use that link. Does that explain? Does that answer your question, Wendy? Okay, excellent. Okay, perfect. So the next point that I have here is pumpers. Okay, I've already touched on it a bit, but please be careful of who you are listening to, especially on social media. If you see someone actually repeatedly um, pumping the stock, and when I say pumping the stock, I mean someone who's actually telling you buy into it, buy into that, buy into this is going to increase 100%, 200%. Anybody who tells you actually that a stock is going to increase by a certain percent, be very wary of that person, especially if they do not provide you material that supports their claims. Okay, and I'm not saying, but by saying material, I'm not saying that they give you some due diligence and information that shows that this company is doing amazingly or what have you. Tell me exactly, why are you saying that it's going to increase by 100%, by 20%, by 15%? Personally, I look at the chart. I can tell from the chart that it's going to increase by a certain level because I understand charting. I know exactly how it's going to behave. And yes, sometimes I get it right. Sometimes it doesn't. It doesn't reach to the level that I want it to leave to get to. But at least it reached to a level that I know it's going to make me profitable. But anyone who promises or states openly that you can actually make 50% or 20% or whatever returns that they promise you, they just want you to get into a stock. They are pumping the stock 100%. And there are plenty of them on YouTube, on Twitter, on StockTwits, everywhere. So just please be extremely careful in terms of who you follow, who you listen to. And my suggestion is that take all information that you receive from multiple different parties, internalize it, do your own due diligence, and then decide whether you want to get in or not. Do not follow blindly. It will most likely end up extremely bad. Okay. I think we have another question here, Andres. Where did you send the link? It's actually in the description, Andres. So look under the YouTube video, Securities Trading Training Session number 1, and then if you actually expand it, let me just look. You will notice I have Twitter account and then TradingView referral link, and then there is a link right there, and you can actually subscribe accordingly. Does that answer your question? We'll wait on Andres. I'll take a water a little bit. Okay, perfect. Awesome. Fantastic. Okay, so the last point that I want to highlight here is you need review your performance regularly. Okay, whenever you're trading stocks. So I personally have an Excel sheet, or exactly an Excel spreadsheet where I basically enter every single stock, enter when I bought it, when I sold it, what is my buy price, what is my sell price, what is the total buy, what is the total sell, what is the profit that I made, okay? And that's pretty much it. And then every single week, I assess how I am doing, okay? You might be telling me right now, well, You know what? My broker does that for me. No, not really. Your broker actually tells you what you have bought and what you have sold. Yes, it does gives you a total um, uh, value for your complete account. However, it does not analyze your stock one by one. And my point here is that I want you to actually start doing it as a best practice and look at each stock that you have traded. See what you have done correctly and see what you have done wrongly. So I think this is the only way that you will learn from your mistakes. And once again, don't be hard on yourself if you've made a mistake. We all do make mistakes. Even the best out there, the pros, they make mistakes. The most important thing in anything in life, not only in stock, is that you learn from your mistakes. If you're making the mistake again, then okay, it happened. If you're making it 3 times, this is my rule. If you're making it 3 times, I have no one else to blame but myself. So please try to keep track of all your trades. Try to review these trades at the end of the week and try to see what you have done right and what you have done wrong. See how much you're profitable, whether you stuck to your plan or you've decided to get greedy and go for more and ended up losing because of that. Okay? So, once again, it's all about the mindset. Just to conclude, it's all about the mindset. Make sure that you're always listening to your inner voice. Okay? If your inner voice is telling you to actually get out of a stock, then please do. Don't let emotions, again, I'm going to conclude with this. Do not let emotions get the best out of you. Trade with your mind, not with your heart. Okay? This will make you extremely successful. And read a lot about charting, read a lot about the best practices for trading. And hopefully in the next few sessions, you will also gain some value from what I will be sharing from a technical analysis perspective. So that's all I had. Okay, so can you please touch more on BRTXQ and the future of the company in the next 4 to 6 months? So great question, Ashley. I've actually mentioned that BRTXQ is a company. I personally am an investor. I'm not a day trader or a swing trader with BRTXQ. I've mentioned openly I have over 30 million shares in that company. I believe they have a very bright future. I believe that they have all what they need to be successful as long as they stick to their plan. I know that BRTXQ over the next couple of weeks or months, they will be removing the Q, so they're no longer a bankrupt company. Octus is actually going to be funding some of their operations. They've also indicated that they're going to issue 300 billion shares. Sorry, let me backtrack. They didn't say they will issue them. They said they're available in case they need them. And you have to understand, these guys are in healthcare. Healthcare, they spend a lot of money on research, on analysis, and what have you. So will they need this money? They will definitely need this money. Will they need it now? No. Will they need all of it? We don't know. They might. However, all this research is important. People who are saying that this is going to go to $1, personally, my opinion, I don't think so. At the number of shares that are available right now, 1.6 billion shares means that this company will be $1.6 billion worth. Will it get to $1 eventually and uplist to NASDAQ, which is what they said they will do? Probably, but they will have to do a reverse split. This company is not worth $1.6 billion. They're not worth $800 million. So at 50 cents, could it happen and the stock could actually pump to that price? It could. You never know. But will it remain at that price? I'm pretty sure it won't. Okay? Until they clean up the house, until they actually do the reverse split, and until they show us some progress on phase 2 of their BRTX 100. So I'm not going to say how much they're going to be in 4 to 6 months, because that's not what I do. I'm more of a day trader and a swing trader, so I analyze the chart based on what happens on the day. But for me, BRTX Q, and that's my personal opinion, doesn't have to be anyone else's. It's a long-term investment, and it personally, I believe it will give huge returns in the future, as long as they do what they're claiming to be planning to do. Does that answer your question, Ashley? Do. Okay. We're waiting on Ashley. So, anyways, while Ashley's responding, that's pretty much it from in terms of what I had for today from a trading psychology perspective. Hopefully, it was valuable. Hopefully, it gave you some thoughts of what you need to do and what you need to think about, and hopefully some best practices. Keep reading about these things. In the next session, we'll be focusing more about technical analysis once again. I'll be discussing support and resistance levels. You're very welcome, Ashley. I'll be discussing Japanese candlesticks. I'll be discussing Fibonacci. And if we have time, we'll discuss moving averages. I'm going to try as much as possible to limit these sessions to 1 hour. I don't want to bore you guys. I don't want to overload you with information, especially that we're starting with all of this. But one last request, please like and subscribe to the channel. I'm seeing we have 19 people right now. Hit that like button again. It's very important, especially when I post videos. It's not only important to watch the videos, but also to like those videos, because YouTube takes them in consideration. So please hit that like button, subscribe, and what have you. So let me just read regarding BRTXQ. How much damage has been done to the chart, or do you ignore it as an investor? So, as I mentioned, as an investor, I'm long-term, Hisham. I'll only say that watch my last video on BRTXQ. I actually posted it yesterday. It does analyze the chart. We are at what I believe is a strong support line, and the RSI should be going up, but we'll have to wait and see. There is a strong resistance right now at MA5. It needs to overtake MA5 for potential increase. The next point is going to be, I think, 0.02, if I recall correctly. But please watch that video. I do explain everything extensively. Thanks, Andres. Thanks, Wendy. Thanks, Jerry. Okay, guys, thank you so much for joining in. I really appreciate your time. Hopefully that was helpful. Spread the word for whoever wants to join in. And please, again, hit that like button, subscribe to the channel, and wishing you a very good and pleasant evening. And good luck tomorrow. The markets are looking good, the futures. So hopefully you'll make a lot of profits. I'll speak to you next week on Saturday at 9 p.m. Eastern Standard Time. Have a great evening. Take care.